let's see one sector of interest, and that's the banking sector, the most liquid sector in Nigeria's market, that's the equities market. And of course, counting down to the deadline of the recap for banks. So let me do this. I'll do this with the head of research at Sterling Asset Management and Trustees Limited, Dr. Patrick Ejemudia. Dr. Patrick, welcome to the program.
Yes, good afternoon. It's actually been a while.
I know, right? It's good to see you.
Same here.
So we see the numbers now. I mean, we've heard many times that the banks are healthy, they're resilient, and all of that. But of course, we believe more in the numbers. We have some numbers here from last year, but we do have some financial that have been released.
For full year 2025.
Exactly. But maybe you want to talk us through what these numbers tell us about the health of the banks, especially as we are counting down. It's less than 2 months now before the recap.
Recapitalization process.
Have you heard stories of possible mergers or
except for the Unity Bank that are trying to do some level of merger. I think that's all.
And that started a while ago.
Yes. So maybe the process have not finished, and nothing has come on air about what is happening, But I know that as time goes on, before the capitalization process ends, the whole news will come, and we'll get to see the whole process.
I think the safe thing is that all depositors' funds are insured by NDIC.
Sure.
So whether there's a merger, whatever happens, depositors' funds...
That's what we were saying, that this recapitalization process is different from the one that happened in 2025. That one, for 2025, was about survivor. This is about scale. This is
about scale. All right. Okay, well, let's see what the numbers tell us. This is for January to September, 9 months performance of Nigerian banks' capital tiers. You want to walk us through it?
Yes.
You can just refer to the...
Yeah, so basically, you see, if we are seeing the aggregate numbers, we'll see what happened to the gross income. Gross income overall for the bank increased in total to about 21 trillion. But overall, when you now come down to the profit is not shown here.
Okay, let's see the profit. Let's see the next slide, please.
So you will see what happened to...
Okay, yeah, you have profit after tax. Is that what you want?
Yes, this is the aggregate. This is the tier 1 and tier 2.
Yes.
There's where we have the aggregates, where we look at the aggregate.
This is what they made, the profit they made after tax.
Yes, after tax, yes.
From January to September 2025,
yes.
The tier 1 and the tier 2.
If you sum it, it gives you what happened in the aggregate in that sector for the tier 1 and tier 2 for that 9 months.
So for this now, we're looking at about 5 trillion,
about 4 trillion, about 4 trillion.
Okay.
4 trillion plus, for 4.5.
Almost 5, yeah.
Trillion. But it's actually a decline from what they had in 9 months 2024. And the reason of that is because we saw total cost also going up. Impairment charges went up, their provision for impairment charges went up, and operating costs also went up. And that was why we saw profit going. Yes, it's because, by their business, they give loan. And as they are giving loan, they're also keeping some level of provision for in case the loan go bad, and that's what we call impairment charge. So that amount they kept
impairment
charge. So that amount went up.
Yeah.
The amount they kept, the provision they made went up. Then operating cost also went up. The cost of personnel running the business, and the cost of other expenses that they incurred. And don't forget, there was also high inflation too, which also drove administrative.
And the interest rates. So while manufacturers are complaining, they are supposed to be smiling. So they've had high interest rate environment.
They are not completely smiling. They are smiling on the one hand because yes, they are getting high interest. But don't forget, they're also giving loan at high interest, and people are not able to pay back. So non-performing loan too is going up.
Is that why we saw, Mr. Otedola recently writing off the bad debts?
Because the impairment charge was high. And every other bank has that level of impairment charge, because as you give loan, you must make provision to say, okay, suppose this person does not pay back. So these are the issues.
Okay, but we see loans to customers, which is the loan you talked about, and customer deposits. Compared to the previous year.
Yes, so there was a growth. There was a growth in customers. In fact, for all the numbers, loan to customers and customer deposits, they went up. But the rate at which loan to customer went up was very small, about 4%. And the reason is because there was high inflation, people are struggling to eat and all that. So, and again, on the part of the bank, they were not loaning to customer because of the fear of default.
What about CRR? I mean, a lot of times we hear complaints around CRR.
Kind of different. It's about, that has to do with the bank.
Does it not affect their loan to customers?
Yeah, of course, it will play a role. But again, they are also putting a lot of cash into the high interest that they are getting from treasury bills and yield and the likes. So, and again, the fear that, will customer pay back? They rather put it on safe instruments of the government, which is bond, and than to give it to customers where they are not too sure whether they are going to pay back. And that was why, even though it went up, the provision that they made for those loans also went up in form of
So
impairment
what
charge.
about deposit? Did it
Yeah,
go
the deposit
up?
also went up too. And the reason why it went up, again, consumers are looking for, high interest. So there was competitive interest that was attracting people to come to put their money in bank. Since the interest on bond that the banks are putting their money is also going up, MPR is high, and once MPR goes high, that's what drives every other interest. So they are also putting a high interest, so it kind of attract customers to come bring their money. So competitive interest rate and some level of confidence in the bank drove customer deposit
Can we
up.
use this to measure the issue of financial inclusion? Can we say when customers' deposits increase, that's,
Not completely, not
Okay.
completely, not completely, because if you look at it, financial inclusion has to do, it increased, but what's the proportion in terms of the number of people that are depositing this money vis-a-vis the number of people that are not even using the bank? So
we still have Nigerians like that.
of course.
Okay, let's see. I mean, there you have it. So the January to this performance
Yeah.
listed Nigeria, you have the
This
gross
is based
income,
on the classification,
international
and national bank.
the assets also. Did you see that increase?
Yes, of course. Assets went up too, and the reason why assets went up is because there was high deposit. People are depositing, and there was low loan to customers. When people are depositing and they are not loaning so much, of course, that draws assets up. So assets went up. But again, majority of those assets that went up was from the international banks, the tier 1 banks, and see what they contributed to total assets.
176, almost 177 trillion.
Exactly.
Meanwhile, so the
Compared to
difference
national
with
bank,
national,
it's very,
is it because of
large.
the value of naira? Does that have a factor?
Not necessarily. I think it's because of their size. These ones are the big banks, so that's their large capital, large size has a way of, helping them to do that.
And then shareholders fund,
It also went
international,
up. Yeah,
obviously.
international went up. And again, the reason is because there was capital injection, the recapitalization process, people are bringing in new money, and some form of retained earnings via their normal profit business that they brought in. So that was what drove it up. But again, international is still driving that space as well.
So as we get close to March 31st, what can we expect to happen here?
With this narrative change, I doubt, because the international banks, like I said, are the big banks. So even though the numbers are going to change, but the narrative may likely be the same. The international bank are still going to be taking the lead in some of these metrics that we put on board.
All right, so you have operating income that's increased as well as expenses.
Yes, operating expense went up, and like I said, it's because of the fact that there was personnel expenses and there was high inflation that drove operating expense up as well. For operating income, we saw that, yes, there was increase in interest income drove it up, but again, we also saw that a lot of the income that came was from interest income. Fees and income also went up, but it wasn't as high as the increase in the interest income.
All right, let's see. We've seen let's see the financials for some banks that have shared their full year.
Oh, okay.
Let's try. So we see EcoBank is one of those banks. We saw profit before tax went up 43.22%, and full year, for this they're expecting it to jump.
So it went above their forecast.
Yes. So earnings with pre-tax hitting that
1.237 trillion.
Okay. All right. Then gross earnings also went up 20.73 to 3.55. We have other banks, I believe. Can we see the next bank, please? The FCMB also, gross earnings surge 54%. That was a lot.
That was high.
Full year, Then profit before tax, that's...
It would have been nice. Look at what is important. Look at the profit after tax now.
Yeah, after all the expenses.
Yes, that's what is key.
Moderated.
The value is not there.
Yeah, so we had FX volatility taxes, but we expect that in 2025, I think this has...
This might, not completely, because there's still some level of margin. Yes, it has gone to
and now that the central bank has approved supply to BDCs.
Yes.
I guess that gap.
The worry, yes, it will close, but people, we are beginning to move from that aspect where we are looking at, okay, the central bank has to intervene. We are beginning to look at, okay, let the market determine the FX.
Yeah, but supply is also important.
Yeah, so we know, because there's also increased inflow at this point too. But yes, the intervention is going to play a lot of role in easing that volatility. So that might go up going forward, go down going forward.
All right. And also for their full year, customer deposit also went up.
Yeah, you see.
And loans and advances also went up.
Exactly.
We have Stanbic also, I believe, So profit before tax reach this
Yeah.
up also sharply.
And now
from-
look at profit after tax.
That's where you always go
that's
to
the because that's where we want to look at as investors.
after all of the
Yes,
spending,
you've
this is what
deducted
they have.
Yes.
Okay, and that shows solid earnings momentum. Total income went
income
up.
rose.
Total
Assets
assets
also increased by
went up, but not
18%.
so much. 18%. Yeah.
Yes, full year.
Yeah, customer deposits grew,
14.
customer loans, and profit after tax.
Yes,
also.
that's it. 52% in 9 months.
52%.
Oh, they picked the 9 months. This is not the full year.
Yeah,
It's supposed to
no,
be
this is
full year.
supposed to be full year.
Full year,
So
2025,
it's 52% in 2025, and that's good now.
Yes, that's good. That's
more
above.
than half
That's
a
above half.
percent.
That's yes.
So for you now, as we head, I know
Towards
you
the-
said as we get close now, we'll hear the big news,
That'll be coming
the
up.
mergers
Yeah.
and acquisitions
Yeah.
that are
Yeah.
expected. What do you expect?
Yeah, for me, well, at the end of the recapitalization, I don't think we expect much to see, apart from the Unity Bank merge that we've seen. Maybe other banks that may not likely meet. Maybe there will be some form of downsizing in terms of maybe from national to, from international to national, or from national to local,
regional to
regional and all that.
and all of that.
Because so far nobody has come up to say they want to do merging, and within this period that is remaining is kind of short for you to say they want to begin it. You can
just 50, just about 50 days.
to say they want to begin a kind of.
So we should have been
merge.
hearing some.
Yes, merging or acquisition.
So I guess our banking sector is healthy indeed.
So yeah, that's the word.
All right, Dr. Patrick Ejemina, thank you so much. Head of Research at Sterling Asset Management and Trustees Limited.
Thank you.
Thank you for your time.
Thank you for having me.
All right.